not winning 90% of your new business because you have some sort of incredible value.
I'm going to take a bit of a different angle.
I've got a budget this big. I'm going to give it to you because you have a really killer plan.
You give a Red Bull to a turtle, what do you expect?
I think that's a dead turtle. So let's move on to...
E-break. Cheers.
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 Does your current premium finance company lock you into long-term agreements? That's because they don't want you talking to us. At IFS, we win your business the good old-fashioned way, with customer service. I know you don't always have to use a premium finance company, but when you do, you should use IFS. Cheers.
Hi there, and welcome to another episode of the Digital Insurance Pint podcast. We're into season 6, if you can imagine that. As always, I'm joined by my colleagues, Steve Earle, CEO of Cheap Insurance.
Hello.
Adam Mitchell, CEO of Mitch Insurance.
Hello.
Jeff Roy, CEO of Excalibur Insurance.
Hey, guys.
And soon to be released, amazing Read to Ride book, which is in the final stages of publication. So, and our new charity sponsor. And we are super pleased to be joined again by Sherif Gemayel, CEO of Trufla Technology. Hey, Sherif.
Hey, guys.
So, Sherif, we were debating whether we actually need to, give you a little intro piece.
Prince, Madonna, and Sherif, people that don't need a last name. Sherif, you're on that list.
There it is.
That's right. Sherif, why don't you give us an abbreviated version of the intro?
My name is Sherif Gemayel. I am the CEO of Trufla. Prior to this, I owned a brokerage, Sharp Insurance, based out of Calgary, that I started about 14 years ago. And Trufla was kind of born out of Sharp, and I've been working with brokers. I've been in the industry for years, not as many years as Steve, but I'm not trying to date you, Steve, or anything like that. And where we provide technology for brokers from coast to coast.
So let's get into this here. So we're going to be talking about broker modernization, broker digitization, whatever you want to call it, some big data, some AI, some significant opportunities for the broker channel, not just through Trufla, but in general. So maybe we should start with taking a little stock of where we are. A number of years ago, I was involved in this. Aviva developed a tool that analyzed the state of broker digitization based on a ton of factors. Trufla, when Aviva stopped doing that, Trufla took that up, sort of redeveloped it, enhanced it. So Trufla, or Sherif, you would have a sense from a number of years ago where that was. I haven't seen anything, since then, but maybe you talk to us in the last 3 years or so, where has sort of the state of broker modernization gone? Is it getting better, static? What's going on there?
So it's a case of those that were at the forefront are even further ahead. Those that were at the bottom end, that we kind of dubbed the laggards, there's been a little bit of movement, but not as much as you think, and then in the middle, there definitely has been some movement, but there's some interesting insights that we've gleaned from it. So again, those were there at the forefront. They'd already appreciated the power of digitization and have used it to accelerate. So they're pushing ahead. Those that were at the end, what we've realized is they're the ones that are actually looking to exit the business. That they don't want to pump in a lot of money, which is actually kind of a poor strategy, because we know that deploying digital technology in your brokerage actually enhances the value of the brokerage. But sometimes they don't see that. And those that are in the middle, there's definitely been a move to digitize at many levels. But the challenge that they're facing and it's one that most technology companies don't realize or appreciate, is how much change management is required inside of the brokerage. Like, it's nice to say you want to deploy all this kind of technology, but to actually deploy it and get people to change internally and change out processes and get your people on board is a much bigger challenge than most brokers even appreciate. And so that's where it usually falls flat. But I can say that there is an overarching movement to digitizing for sure.
Just quickly on TrueScore, what is the area? Is there any areas that brokers are very weak and need to improve on? Like, what sticks out to you that, man, people are just missing this. They really got to start working on this, and they're not putting the effort in, or they don't understand it. Is there any areas that jump out at you? And like, if I was a brokerage owner, I can't believe I'm not doing anything on this. Share that with our listeners.
Yeah. So the biggest one that we get out of it is the way most brokerages operate and the way they build out their sites right now is they want it to almost be like a brochure of what they do, and they're missing the point of what the site should be. It's actually a lead generator, not a brochure. So they deploy the site and they leave it, and they don't look at how the site performance changes over time. A site degrades naturally over time, especially as the World Wide Web is a living thing, and it's constantly updating, and the technology is advancing, and your site has to keep up with it. And if your performance of the site and how the site is structured and even the content that's on the site isn't geared to driving a lead, you'll just fall off the map, and and most brokers don't even realize that they are in the most competitive domain online. There is nothing more competitive than insurance online. So it takes a heavy lift and a big effort to, keep your site well maintained, keep the performance up, curate your content to who you're talking to, and to generate a lead and look at it as a lead generator, not just as a brochure site. Nobody wants a brochure site online for insurance. So that's the biggest weakness that we find constantly.
So people are still at Web 1.0 when they should be at Web 3.0. And, one thing, I don't know if we can, Tom, I'm not sure if we want to go here, but talk about core vitals. Like, Google's came out with core vitals about a year and a half ago. It's kind of been the holy grail for our team to pass it. And I've never had more difficulty trying to pass something in my life. I'm hearing that, hey, you don't have to pass it because only 25% of the traffic is on Google. I still feel Google's got a number, you should pass it. What's your thoughts on core vitals and how important it is for brokers to actually look at it? Or is it just a number that nobody cares about?
Let's look at it, frame it differently, right? If Google is offering it as a free tool for people to use, and they've taken the time to build it, and they're constantly updating it, that it's something that they're interested in. And there's a reason why they look at that number. So anybody that tells you that looking at those core vitals and performance doesn't affect their SEO is misstepped and doesn't understand this is a tool provided by the same company that ranks your sites. So it is vital. And it's funny because we're going to talk about the AI stuff that's coming out. And so there's a big movement right now, and we're even seeing it from brokers, that they want to use AI tools to curate content on their website. And there was already a code red put out by Google internally that they are developing tools to combat that if a site is deemed to be using AI to generate its content, that could be the next Panda 2, which is, and for those who don't know what Panda is, it was an algorithm change that happened in 2011. And when you weren't following the rules of SEO, the rules of engagement for SEO, or weren't, kind of Google's rules, they would basically delist you off of Google. And being delisted off of Google is basically being wiped off the face of the earth. And so there's big chatter around a Panda 2 coming out. And, the fear of too many companies using AI to generate content that is not authentic, that is not proper. There is a way to do it, but you have to be super intelligent with how to do it properly.
It's cheating. Google sees it as cheating.
They see it as cheating, for sure. But there is. So I'll say from a Trufla perspective, and we can talk about this in the AI part, there is ways we are using, and we're already beta testing how to use tools like GPT, injecting it in a website and augmenting the data, but still making sure that it's authentic and that it's valuable to the consumer, that it's not just generic AI content, for an auto insurance page or an aviation insurance page.
So, Sherif, you mentioned that the higher level modern digital brokers are accelerating, got their foot in the pedal. Next folks down are moving, and the bottom folks are not. Outside of potentially just sitting there waiting to be sold, like what other factors do you think are holding brokers back from pushing ahead in this curve? Especially given the comment you made earlier that insurance is the most expensive and competitive space on the web.
So the two easy answers for that. One is always cost, right? To implement this stuff, money is technology is not cheap to acquire and deploy and implement, and there's costs at every level there. And then it comes down to change management. And there is an intangible cost on the change management side because of the operational impact that it can have as you're ramping up to deploy new technology, and that is where brokers tend to get hung up big time.
So, Sherif, haven't you just contradicted yourself in the sense of, I don't know, 5 minutes ago you told us that deploying technology makes your brokerage more valuable. Now you said deploying technology is super expensive. Super expensive means hitting your bottom line. And if your brokerage is valued as a multiple of your EBITDA, where's the balance?
It depends on the technology that you're looking to deploy and whether you can actually get a meaningful ROI on that technology. So it comes down, if you want to survive, technology is now table stakes, and we know that. I think we all know that. What technology you deploy and the real ROI, and not just kind of bright shiny object, is the challenge, because deploying it internally is a heavy lift, and you need to make sure you can get that return. Some technology you can get that return much faster. Some take a little bit longer, and depending on when you're looking at selling your brokerage, I mean, you start making strategic decisions, at that point for how to or what you want to deploy internally. So they actually still fall in line together, but there's no such thing as a technology that doesn't cost money. There's significant research and effort that goes into building out the technologies.
What you're saying is just buying it isn't enough. You got to work it.
You got to work it, and that's where brokers fall. They've spent a lot of years buying it and not doing anything, and then it kind of sits on the shelf, and then they look back and say, "Well, we bought all this stuff and we never used it. Do we actually need technology?" So it creates kind of a vicious circle, right?
This sounds like my Bowflex.
That's a good analogy. That's a great analogy.
Sherif, let's talk about the cost side, because I think based on some of the stuff I've been hearing, there actually is some opportunities for brokers to maybe reduce some of that cost. There's much as I hate to say it, there's a good government program out there called Cdap, which is aimed at promoting investment in Canadian businesses, specifically small businesses. And you're way more knowledgeable about it than I am. And maybe you want to talk a bit about Cdap, what that program is and why that's interesting to brokers and what Trufla's involvement in it is?
For sure. So Cdap is an acronym for the Canadian Digital Adoption Program. It was a program that the Government of Canada released mid last year, around June last year. It wasn't that well marketed, but the whole point of the program is the government is putting money up to digitize every business in Canada. So they're focusing, every business should have digitization, a certain level of digitization to it. And so recognizing that digital does cost money and it is kind of a heavy lift, they've created a number of grants. And the ones that we're looking at, it's called Stream 2. It focuses on the entire digital roadmap of a brokerage. So they give grant money to hire an approved digital advisor. So you've got to be approved on the program to come in and create a very detailed and robust digital roadmap for the business. So in this case, it would be the brokerage, looking at everything internally, looking at all the pain points, all the technology that's being used. Is it being used well? Is it not? What technology is available to bring in to improve, to get that ROI, to improve efficiencies, improve productivities, and all the buzzwords. And then, kind of the brokerage gets this detailed digital report. And from that, brokerages can qualify for two different amounts. If you are up to $5 million in revenue, then you qualify for $50,000 in funds. If you're between $5 million and $100 million in revenue, you qualify for up to $100,000 in funds. This is a loan that's provided through the BDC that is a guaranteed loan to the business. It is interest-free, amortized over 6 years with a 12-month capital postponement, so no payments for the first 12 months. There is no fees. There is no securities. So there's no personal guarantee, corporate guarantee, GSA, or anything that needs to be paid on it. And it can be used for pretty broad, quite broadly. So it can be used to deploy technology, new technology, to upgrade existing technology. It can be used to hire and train people. It can be used to bring in additional advisory services, to basically anything that a brokerage needs. This money is available to be used for it. And with the 12-month postponement, it allows a brokerage to successfully deploy, see an ROI on the money before they even start to pay it back. So it's effectively free money for every business in Canada. And you do have to go through an approved digital advisor. As it stands right now, at this very moment, Trufla is the only approved digital advisor in the insurance industry for insurance in Canada. Now, a brokerage can use any digital advisor. We've just kind of been approved as an expert in the insurance world. But we want to work with brokers to kind of create those roadmaps, provide the recommendations for technology, and it is not just Trufla technology. We will be recommending all types of different technology from all types of vendors. It's not sole sourcing; it is true consulting services and a digital roadmap for each brokerage.
Isn't there two parts to the grant as well? Because there's a $15K consult fee that the business or the brokerage in this example pays first to get the digital strategic roadmap rolled out, and then you get that reimbursed, I think, from the government, maybe via BDC. And then once executing that plan, or to execute that plan, you get access to the 50 or 100K interest-free loan.
No, the brokerage doesn't actually have to pay any of that up front. So the 15,000 is for the consulting fees, and then they would submit that invoice with the roadmap to the government. And once that's approved, the government reimburses 15,000. So it's the brokerage, they will only pay up to 90% of it. So the brokerage does have to pay 10% of the cost of the consult, and the government pays the rest. So there isn't a big amount that has to come out from the brokerage. And then once that's approved and the plan is approved, then they would apply for the loan, and that money would be deposited straight into the broker's account to be used how they see fit.
Earlier, Tom asked you what's holding modernization back. I'm going to ask you who is holding back digitization / modernization of the broker channel.
I know where you're going with that, and I'm going to say the brokers are their own worst enemies when it comes to that. I'm not just going to look at, you can't just look at saying, okay, connectivity, carriers, sure, they play a part, the systems don't integrate, the data is lacking and whatnot, but that's kind of marginalizing it into one part of the process. There are so many different things that a broker could do that would instantly elevate their game. And I think that a lot of the stuff that we're talking about in terms of that, APIs and connectivity and stuff, that's like 5 or 6 steps down the road. You can't really talk about API and connectivity and wanting to do all that when you don't even have the internal systems that can do that. Like, there's multiple things that have to happen. So take the first few steps and get to those systems that have the ability to do that. And in all honesty, that's part of why carriers aren't moving at the lightning speed that they need to, because even if they do have these APIs and whatnot, and some of them do, go ask Owawanisa how many brokers are actually taking advantage of the millions that they've spent to create all the APIs that they have. They're going to tell you it would look like a lost cause at this point.
Well, it's some to none. It's almost none.
Yeah, but so we can't always just look at, well, you're part of the problem. The brokers have the opportunity to do big upgrades internally, at various levels that don't even need connectivity. And up their game, and then bring in the what I'd call more advanced pieces.
Question, just to flip it over, I think that's game changing. To kind of flip it over to AI. I don't know if we're ready to pivot onto this, but AI is not going to replace brokers is one of my lines, but brokers use AI will replace those who don't. That's something I firmly believe, and it's something that kind of drives me. You've got some, some neat stuff under the hood with Broker X-Ray. Maybe tell the listeners, what you're doing with AI and how Trufla is trying to change the game to be able to let brokers use their data and pool it with other data to make intelligence decisions to actually run their brokerage.
We should let Sherif answer it, but I do genuinely think that AI is on the precipice of starting to displace and augment a lot of what brokers do.
Yeah, I'm gonna suggest that it may not displace, but it'll augment. So right now, one of the big crises that the industry is facing, every single one of you in a brokerage is facing this, is there is a massive people crunch. You can't get people fast enough. You can't get them trained fast enough. There's a bigger need for insurance. Insurance is becoming even more complex with a lot of what's happening around. There's new insurance products coming out. And for a brokerage that focuses on kind of one line of business, if you were typically a personal lines brokerage, you didn't step into the commercial space because you would need a heavy lift of expertise and things like that. So you typically didn't. If you were commercial, you didn't do it the other way. Now, AI is going to let you grow your business faster, get into different lines, and not need as many people. You won't have to grow your people base quite as fast. So it quickly gets rid of, I believe it's going to quickly get rid of the talent crunch, because you nailed it, Adam. You're going to be able to do more, have more policies on a per CSR count, and the education to getting there is going to be accelerated.
That's displacing customers. I think we're not displacing customers. That's displacing brokers.
No,
right? You may not get.
It's repurposing. I agree with Sherif. It's repurposing the existing team who are doing donkey work that isn't customer facing, that isn't relationship driven. It's stuff that if your staff does 20 things, 5 of them they freaking hate and actually aren't necessary, and we get AI to do those 5 things, and we can focus on the 15 that are really good. Am I right or wrong?
Let's be honest with ourselves here. What makes having an insurance brokerage one of the greatest businesses in the history of mankind? One of the big ones is the regulatory. Do you think the government's ever going to say, "Oh yeah, we're going to let an AI bot just start selling insurance without having a person there"? The AI machine is just going to take over. No, you still have to have REBO licenses. You've got all this regulatory, this high bar that's there. And by the time the government even gets around to that, we're talking eons down the road. So brokers are still protected by the regulatory threshold, the high regulatory threshold to sell the policy, but they'll be able to sell and service so much more with less regulated or less licensed people inside each brokerage. They will never be eliminated. They'll just be augmented.
That's the piece I'm holding on to, and we might be saying two sides of one coin, but if currently we have one broker per 1,000 clients, and we're going to go up to 3,000 clients per one broker, that is the displacement of 2 brokers in the current model. I may then choose to have them do other valuable things, but there's 2 displaced brokers in that simple equation.
So the reason why I say 10 times, and if I go back to the math that you just used, if I say 10 times, when I had Sharp, we were operating 1 CSR for every 2,500 policies. So we were already 2.5 times, and that was just using a technology like True Mobile. Just deploying True Mobile and deploying it properly, we were 1 to 2,500. Add AI onto that, you get to 10 times pretty fast. On top of that, so you're 1,000. That's not even a realistic measure. You should be at 1 to 10,000 at that point. So how many problems does that start to solve, especially in the hiring and licensing side of the world, which isn't going to go away?
Yeah. I think you guys honestly are saying the same thing, right?
Yeah, everybody's saying the same. We're all agreeing.
You're both talking about you're both talking about freeing up capacity, and what you then choose to do with that capacity is up to you. You could then say, right, half of our quotes are dying on the desk. In the old days, now they don't, right? Normally we spend 10 minutes doing a quote, then we can spend 30 and do a killer job of it. Right now I never talk to my clients on renewal. Now I can talk to all of my clients on renewal, or I can fire half my staff and put the money in my pocket.
Well, hold on. There's an 800-pound gorilla in the room, and let's not think, hide under a rock on this. As AI comes in, this is where Jeff was saying earlier, AI will replace brokers that don't use AI, not brokers entirely. Because as AI becomes more prominent and brokers become more efficient, you think there's not an insurance company that's sitting there saying, wait a minute, you're now doing 10 times the work with the same people. If you don't think that has an impact and that's not being talked about, then you are living under a rock.
So the piece that I'd parse on there is like on the equilibrium of brokers like first getting to this efficiency are going to enjoy all kinds of margin and opportunity to redeploy margin and invest in things. If you're the last mover to get there, you're going to go through some painful time of quite likely reduced revenue per policy.
Basically, what you're saying is, from a carrier's perspective, they see the brokerage channel at large freeing up significant amounts of capacity, right? Therefore, making significantly higher EBITDAs, and the carrier says, well, why do you need 20% commission then?
Even if you're getting 10 times and the commission was slashed in half, you're way more profitable than where you are today. And the consumer wins too.
Absolutely. You're taking cost out of the equation.
All the way down.
Absolutely. And you're taking, at that point, useless cost out of the equation. So everybody wins. And I think back to Adam's point is that's great if you're one of that top 25% on the curve who are at 10x. If you're the laggard and you're at 1x, and now the commission is 14 points instead of 20, it's goodbye EBITDA. You're now negative.
Insurers have a proven track record of, as brokers become more efficient, insurers give us more to do. Stuff that was done, right?
Is that like insurers coming out with new questions that aren't the CZO standards and now adding them in and making us do more work?
Yeah. So as soon as we create efficiencies, as soon as we get bots doing all of our portal work, they'll do something else to give us another one of their jobs.
I mean, it wasn't that long ago. Steve could sit in like an actual store-bought chair, and I had like an actual finished room to do these recordings in. Like times are getting tougher.
Right. So we talked AI. Let's kind of put AI aside because what Sherif you're doing is actually not technically AI. It's more of a big data approach, and that's your broker X-ray. So maybe you just talk a bit about what that is and what it does and what benefits your clients have taken away from that.
Yeah. So broker X-ray was kind of the first one that we launched, and basically it analyzes each renewal on a renewal by renewal basis, and it'll tell the broker how price competitive that renewal is relative to the market should that client go out and shop. It'll do the analysis on the year over year change of the policy, and it'll basically tell you where you should place that business with what market should you need to move it. Whether it'll give you the intelligence of here's the lowest that they'll find out there in the market, even if you don't carry that market. And what's the lowest you'll find inside your brokerage with the markets that you carry. And Steve helped us out big time by bringing more to the table, where now we introduce kind of claims and convictions and whatnot right at the outset. So all it's intended to do is give the broker upfront intelligence that they then figure out internally what they need to do with it, how they should, what they should do with that client. And brokers, our analysis over the last year is brokers that have deployed it properly and that are using the technology, embedded in the process, are now seeing north of a 2% lift on their retention.
2% or 2 points, like 90 to 92, or
yeah, like 90 to 92, like 2%.
Yeah, so 200 basis points, 2 percentage points up. So if I can sort of reel this back a second. So in theory, most brokers should look at, in theory, if you had all this AI-driven extra time and horsepower, look at every policy. But that is impractical for the vast majority of brokerages, right? So every brokerage knows they're going to lose 8 to 10% every year. And what essentially, if I understand this correctly, basically what you're doing is identifying those policies that might be, let's say, 25% of the book that are the most likely to contain that 8 to 10%.
Yeah,
right. It allows you to focus on your greatest flight risks, because we've talked about number of policies per CSR and the amount of resources we have. Like you said, Tom, it's just impractical right now for a broker to, do what it is we'd all really want to do with actually every single damn renewal. This gives us more intelligence to focus on those that need it for a bunch of different reasons, whether it's price or other things. It gives you focus.
But there's a flip side to it too. So all we've talked about is the retention side. There's actually a whole other side that most brokers have never looked at because they have no mechanism to look at. And that is actually optimizing each of their clients. So let's say you've got a client whose policy premium actually went down by 15% on a year-over-year basis. Well, that actually affected your income as well by 15% on that policy. But we've done an analysis on that client, and that renewal is actually 30% lower than anything they would find out there should they go out and shop. Well, could you right size that client now, make it a win-win-win for everybody? Increase limits, increase, add on endorsements, and now the client's policy is only going down by 5%, but they have much more coverage, and you've right-sized that client knowing that if they go out and shop, they actually won't find anything cheaper, and you're starting at a higher point now. So we've done an analysis on that end. Clients that are using it on the flip side are seeing a 1.5% increase on their revenue.
Is this the first application of artificial intelligence and or analytics at this level in the broker world? I don't know of another one.
As far as we know, we're the only ones that have ever created anything like this. And Tom, you've been around for a long time too, and you've been on the carrier side. I don't think there's ever been anything like this kind of intelligence for a broker before.
Not for the broker. I mean, carriers have implemented this with their pricing models for years and years and years, right? Like Intact's customer value index, or what CVI, whatever it's called. I remember actuaries working on that back in the 90s. Right? It was obviously rudimentary, and it has evolved dramatically since then. But this is the first sort of multivariate, big data model that I'm aware of that's being used in the broker world. And partly because in order to use big data, you have to have big amounts of data, and most brokers don't have that. And even the big ones like a Hub, they might have, over their acquisitions, they might have 16 different databases that are difficult to integrate, right? So the amount of data that they just have access to just isn't anywhere near enough to have the kind of efficiency and confidence level around the outcomes of the data. What Sherif has been able to do is get the power of many brokers together to make that happen for each individual player. So anyway, long story short, no, I've not seen this before. This is the first one I'm aware of.
And we're only starting to scratch the surface of what is like. We're looking at it from this perspective, and you guys can do the math and you can do the numbers in your own brokerages. On average, across brokers from coast to coast, a 1% increase on retention or revenue increases your EBITDA by 20%. It's a 1 to 20 correlation. And do the math on it. So if you're increasing by 1% on the revenue side and 2% or 1.5 and 1.5, and let's say you've got an aggregate of 3% on your brokerage, you're actually increasing your EBITDA by about 60%. And that's just pure math.
Here's another use application is I think brokers get frustrated with their markets at different time, and some brokers will go looking for another market to add or flip or change. Here's an actual intelligent look into the marketplace with your book of clients as how it would relate from markets you don't have. Like, that's pretty useful and interesting little thing sitting in the toolbox that I'm curious to see how people pick it up and use it.
Well, the other thing that the tool does is it'll tell you on all your renewals. So it'll tell you, okay, all your renewals aggregated together. Here's what percentage of them are in call it the high risk category. Here's how many of them are just right, and here's how many of them you can price optimize your book, right? So they're on the low side. But then we break it down on a per carrier basis inside of the brokerage as well for the markets that you have. So you'll know on a per carrier basis, oh man, this carrier has a ton in the red. Looks like I'm going to be spending a lot of time with this market right here. Or this market here, this is perfect. This is right in line with the average, across all the markets. So it even gives you a level of intelligence on a carrier level and how you are, how your book is ranked from a too high, too low, or just right perspective.
Awesome. As we start wrapping up here, maybe any other tools in the pipeline you've got coming out, Sherif, that you can talk about, or anything changes that Trufla is going to announce? Like the Broker X-Ray has been cool. This new Cdap program you're working with is awesome. Anything else that going on at Trufla that our listeners should be aware of?
Yeah, I mean, we've got a lot that's in the pipe. We are doing a lot of work using data and AI on the rating side of the world. We're applying data and AI on the client acquisition side of the world, looking to use it to power SEO and other kind of web capabilities. Everything we're focusing on right now is on data and AI, and then embedding it into the tools to power brokers faster.
plug the conference coming up.
So Amplify Conference, September 25th and 26th. We are we kind of recognize that in Canada there isn't any meaningful tech conference, especially for brokers. It's kind of that moniker of InsurTech, but broker-specific tech. There really isn't anything worthwhile. So we decided to kind of expand Amplify and focus on that. We are bringing in vendors, all types of vendors. It is not a Trufla-focused thing. It's a broker technology-focused event. All types of vendors that have technology for brokers. We're bringing in some remarkable speakers. One of our keynote speakers is Jeff Adamson, who is the co-founder of both Skip the Dishes and Neo Financial. Brett Colvin, who's a co-founder of Good Lawyer, which is an up-and-coming disruptor in the legal space. We've got, Tom Reed is a speaker to talk about the digital connectivity.
So you got some amazing speakers and me.
No, you are one of the amazing speakers. And we've got a bunch more. There's education tracks, there's speakers, there's demo stages so that brokers can see the technology live and in play, all types of different technologies. It's a pretty cool function that is going to be fun too.
So we've been toying with the idea of doing a show on benchmarking. And as you're talking through everything and seeing all the brokers that, like, one of the questions is, there's historical benchmarks. We talked about the number of policies per CSR and that sort of thing. What are we seeing for a benchmark in percent of revenue to your tech stack? Like, what does that, is it 2%? Is it 12? Where
7 to 10% is the norm now. 7 to 10% is kind of the norm for tech spend, which is really uncomfortable for a lot of brokerages to get to that level. But anything kind of below that is not really going to have any meaningful change in the brokerage, which is why things like the Cdap is so crucial right now, because it just injects that cash, so it allows you to get that return on investment up front and really kickstart that the spend that you need to digitize your broker.
I presume that number includes your BMS, so it's tech entirely.
Yeah.
Awesome. Well, listen, let me give a shout out to our premium sponsor, premier sponsor, gold sponsor, top sponsor, only sponsor, IFS Premium Finance. Thanks so much, guys. And of course, a shout out to Excalibur's Read to Ride program. And by the time this comes to air, I think the book that Jeff has been shepherding through the process will be in digital and actual print. So looking forward to that. So Sherif, thank you very much for coming on the show and sharing all the new stuff that's happening.
Thanks, guys.
Thanks so much, Sherif.
Great seeing you all.
Is retention important to your brokerage? Of course it is. That's why at IFS, we have a cancellation prevention process. Want more details? Give us a call. I know you don't always use a premium finance company, but when you do, you should use IFS. Cheers.